Early stage delinquencies rise across all credit tiers. Lower VantageScore credit tiers grow modestly as more borrowers migrate to near prime and subprime. Originations increase month over month across all lending products. Is this a sign of consumers feeling confident or a reason for concern? I'm Jeff Richardson, host of Credit Gauge Live. I'm joined as always by my colleagues Susan Fay and Atif Mirza, our lead analysts. Susan, let's get right to the first question for you. How are consumers handling their credit this month?
Thank you, Jeff. In January 2026, early stage delinquencies, which is categorized as delinquency payments that are between 30 and 59 days past due, rose across all VantageScore credit tiers. The subprime credit tier had the largest delinquency rate in January of 2026 of 11.9%. When you look at the aggregate level of early stage delinquencies, what we saw in January was that early stage delinquencies were at 1.14%. So it's an increase both month over month and year over year.
That's interesting, Susan. So we're seeing delinquencies rise. That means there'll be some shifts in the credit tiers. Atif, a question to you. How are those credit tiers shifting and where are consumers migrating?
Thank you, Jeff. We track population distribution across credit tiers in our credit gauge analysis year over year. And what we saw historically was that the prime segment shrank and some of the consumers moved into subprime and some moved up into super prime. But in January, in most recent data, what we are seeing is that prime and super prime segments shrank, about half a point in prime segment and about quarter point in super prime. And population actually went down into near prime and subprime segments. Now, this is not a sudden drop in population distribution, but a gradual increase that shows that more borrowers are feeling the pressure. Now, there are two reasons behind this. One, we feel, is the student loan reporting resumption that's affecting the credit scores for some of the borrowers. And also, as Susan alluded to, higher delinquency rates across credit tiers and credit segments. Now, this tells us the start of the 2026, most consumers are feeling the pressure of high interest rates and high cost of living, and they're feeling it.
Thanks, Atif. That's interesting. So as scores shift downward, presumably that could affect people's ability to access credit. Susan, over to you. What are the trends around originations?
So in January 2026, we saw new account originations across the board rise month over month with the exception of credit cards. So credit card new account originations slowed slightly from December to January. This is not unusual because we saw the holiday bounce in December with new credit card openings at the point of sale. But credit card new account openings were down approximately 0.09% month over month. Still in January 2026, credit card new account originations remain higher than they were a year ago and higher than pre-pandemic levels. The other thing that I'd like to point out is that when you look across the other products that all saw increases from December to January, personal loans saw the largest increase. So they were up approximately 0.54% from December to January. This could be an indication that consumers are leveraging personal loans instead of taking out new credit card accounts in light of the elevated interest rates.
Thanks, Susan. That's really important information for lenders. There's a lot of uncertainty out there, so thank you both for these monthly updates. Also in the uptick is mortgage originations. That's actually where we'll pick up when we get back with our special guest, Tony Hutchinson. Tony is Executive Vice President and Head of Public Affairs here at VantageScore. Tony spent a decade at Fannie, a decade at Freddie, so there's nobody better qualified to help us unpack what's happening in the mortgage sector. Please stick around. We'll be right back. Welcome back to Credit Gauge Live. I'm your host, Jeff Richardson, and I'm delighted to be joined by my colleague, Tony Hutchinson, Executive Vice President and Head of Public Affairs at VantageScore. Tony is a Washington insider and has deep experience and knowledge about the mortgage market. And so we're going to dig a little deeper into that sector than we did during our earlier segment. So Tony, thank you first for joining.
It's great to be here.
And what I want to start with is the topic of credit score competition. Mm-hmm. Over the summer, FHFA mandated the use of VantageScore 4.0, and I'm curious what you're hearing from lenders about credit score competition.
Lenders are extremely excited to use VantageScore. Mortgage lenders are excited to have the opportunity to have some competition in the market space. Specifically, they are also interested in the fact that VantageScore 4.0 is going to offer a broader audience for them to service. We come in and we score 33 million more consumers. They see that as a great opportunity to expand their business. The big key for them is not just that it's going to open up more business, but by adding us to the marketplace, there's some competition in pricing. And I know that people have also been talking about affordability. We'll get to that shortly. But between the new market opportunities for lenders, the possibility of some cost abatement, a lot of excitement in the marketplace.
Yeah, I can imagine. So lenders win with the cost and opportunity to grow. Consumers win with increased opportunities to get mortgages. But that begs the question, where can lenders actually use VantageScore right now?
Lenders have a lot of opportunity in the marketplace right now to use VantageScore. If you are a member of one of these federal home loan banks, Chicago, Cincinnati, Dallas, New York, San Francisco, you can pledge collateral, mortgage collateral, with a VantageScore 4.0. If you do a lot of Veterans Administration lending, you can submit packages using the VantageScore 4.0 right now. But the real place that I think people can actually see where the rubber meets the road is in pre-qualifications. If you're in the conventional conforming space, you can pre-qualify consumers right now using the VantageScore 4.0 to see exactly how this is going to help those consumers in the marketplace. The other place, and this is really for those folks who've leaned into the servicing piece, you can use VantageScore 4.0 right now for servicing your mortgage portfolio. It's at a critical time where the industry really wants to know how consumers are performing. Why not use the product that is the most predictable product out there related to defaults on your servicing? So pledged mortgage collateral for federal home loan banks, Veterans Administration lending, pre-qualifications for consumers, and then servicing your existing book. Those are places you can use it right now.
Thanks, Tony. And of course, to use VantageScore in some of those ways, you will need to map FICO Classic to VantageScore 4, and VantageScore has actually done that by score band. You can click through the link in the description to see that mapping. Question then, back to you, Tony. You mentioned the pricing. A lot of lenders feel that the price of FICO Classic has unreasonably risen over the past few years. What can they do about that?
So costs in housing have gone up exponentially. One of the big things that the current administration is working on is housing affordability. Well, that plays into the credit score arena as well. Pricing there for credit scores has gone up substantially. Lenders right now can take advantage of pricing for VantageScore 4.0 that's been offered by the three credit bureaus, Experian, Equifax, and TransUnion. In many instances, a VantageScore 4.0 score is free for the marketplace, so there is no cost. And if you do incur a cost because you're buying the score on its own, then it's more than half the cost of a FICO score right now. So lenders can move to VantageScore for some of the things that I already mentioned. Pledged mortgage collateral to federal home loan banks, VA lending, pre-qualifications and servicing, and save money, either by getting a VantageScore at the time that you get the FICO score, and the CRCs have made that for free, or if you just get the VantageScore on its own, it's about 50% or more, at least 50% cheaper than the score in the marketplace.
Thanks, Tony. That's significant savings. Do you have a sense of kind of what that means overall?
Yeah, actually, Equifax did a study recently where they estimated that by lenders utilizing VantageScore 4.0 right now, they could save up to $600 million overall in the marketplace. So a $600 million savings for the entire mortgage ecosystem if you migrate to VantageScore 4.0 right now. That's no small potatoes.
That's the power of competition. Let's shift gears here, Tony. How did VantageScore's usage in asset-backed securities grow, and what does that say about the marketplace?
2025 was a banner year for VantageScore in the asset-backed security space. We eclipsed $22 billion in assets that utilized a VantageScore. That is the highest mark that we've reached in the 3 years that we've been monitoring this. Just to level set, we only reached $13.4 billion in 2024. So 2025 significantly was a significant increase for us. What that says is the lenders, both originators and investors in the marketplace, find value in VantageScore. The originators are already using us in a plethora of lending opportunities for personal loans, auto loans, and credit cards. And instead of them stopping there and rescoring and going to market with another score, they're saying, no, we don't want to do that. Similar to the conversation we just had about cost. They don't want to incur more cost, so they're just carrying the score all the way through. Investors are saying we're fine with that, which is why they are purchasing those asset-backed securities. And we expect to see that carry forward into 2026. In fact, in just the first 6 weeks of this year, $4 billion of asset-backed securities are utilizing the VantageScore. So I'm expecting 2026 to be even bigger than 2025.
That is great news for the marketplace. And Tony, really appreciate you coming up here and being with us in person.
Yeah, great to be here. Thanks for having me.
So that'll be it for this month's edition of Credit Gauge Live. As always, you can go to VantageScore.com, use the Credit Gauge tool, or download the analysis. Until next month, thank you very much for joining us.